Hi, this is Simon with Trade and Perform Coaching, going over the trade review for Friday, May 9th, 2014. So let's take a look at the gate. Every day I have a couple things I want to accomplish when I'm setting up my trade day. Okay. The first thing is I want to locate where my highest odds trade locations are, right? I want to identify early whether we're in a balanced day or non-balanced day, right? And then the third thing is I'm looking to take those trades that fit within my trade plan. Now, my trade plan, right, is not necessarily in alignment with all of my coaching clients' trade plans and vice versa, right? Everyone has a different personality, and your trade plan has to fit your personality. I don't think people give enough weight to that when they're deciding, when you're looking around the internet and you're looking at which trading rooms to take or not take, whose trading style fits your particular type of trading. And the best way to resolve that issue is to find your own trading style and to find those trades that work best for you as an individual trader. You have to distinguish between the pressure of wanting to make money and the pressure of being able to read the market and the pressure of following your own strategy. And all three are separate, right? The way I try to eliminate the pressure of making money is I focus completely on my process from beginning to end. The first step is, what is the trade setup? The second step is that I follow the checklist of getting into my trades, and then I follow the checklist of getting out of my trades. And then most importantly is when I made my trade plan prior to the day starting, did I accept my risk? Now, normally I can tell you, as a trader, I usually take the first trade into the prior day's low, particularly with a decent rotation, which we had here, right? On this particular date, it stopped it, and it stopped it pretty much to the tick, 1863. 1865 was the entry point, and 1863 would have been the stop, and they simply ran the back of the low, and it stopped this particular time. Now, never mind that I've taken that trade multiple times prior and have made a lot of money, this trade simply didn't work. So I wanted to focus on that because I don't want to focus purely on how much, how I always do well or how I always don't do well, right? Instead, I want to focus on what's the lesson learned. Okay, so a couple of things. First of all, size of account determines how aggressive you can be early in the day. I have dealt with all types of traders before. Some traders simply say, hey, the first 30 minutes is too volatile for me. I don't want to get run over and be put in the hole early in the day and then have to take trades through the course of the day just to get to break even or have to deal with the angst of being down right out of the gate. It's frustrating. So they choose not to trade. Other traders like myself are on the other end of the spectrum, and I say, I don't care if I get stopped or not. If I know this is a high odds trade, I'm willing to take it, and if I get stopped, no big deal, and I move on to the next trade. The traders who get themselves in trouble are the traders that say, well, I don't want to miss the trading opportunity, but I don't want to get stopped. And if I take it and I get stopped this time, I'm going to be in agony, right? What that says about your trading plan is that you're not sure that the trade you're taking works over a series of number of times taking that particular trade, right? That you either don't have the data or the execution ability to repeatedly take the trade time in, time out, day in, day out. Okay, so there's not a lot to say here besides that this got run, and unless you could read the DOM and price action, and you even got a little pause right here, right, in the first 10 minutes. But basically, the market ran the stops, and once we ran the stops, we were done. A trap trade set up in this area, right, and once initially at the prior day's low, then we got above Globex low, and that kind of sealed the deal. We did a backside test, and we came and tested the other end of the range. That's just how, and what was the clue that we were going to have that kind of market? Well, if you look, and let's put in an NYSE tick here. Okay, and I'm going to show you this. When the NYSE tick runs from minus 500 to plus 500, guys, you should have this highlighted, okay? This is the very definition of a balanced day. It was perfectly balanced all day long, right, with small spikes above and small spikes below. When you have that kind of environment, what is the predominant type of price action that we have? Well, the type of price action we have is it gives head fakes on the breakouts and head fakes on the breakdowns. So if you look, the tick never exceeded 500 on the downside, quickly indicating, right, that we were not facing a trend day down, right? We were even having, in bizarre trade action, right? We were actually having positive tick readings with negative candles, and which is why I say caution on using the tick to set up tick divergence trades in the first half hour. Okay, but even if you look after the first half hour, right, predominantly completely balanced. What is the trademark of a balanced day? The trademark of a balanced day is a head fake to the break to the downside, right, that gets bought and pushed back into the middle, and head fakes to the breakout to the upside that gets pushed back to the middle. That's what we saw here. Looked like we were going to roll over, third time down, little spike in the tick right there, bottom of the market, push back to the middle, right? If you look here, we had a breakout to the upside, spike and tick to the upside, and by the way, that was beautiful. This is almost a 1,000 tick reading, right? Everyone thought, my gosh, we're going to run, it's going to take off now. Wrong. And I put out a tweet right at this time. If you look, this is 11:45, 12 o'clock Central Time, right in here. And I'm going to pull this tweet up so that y'all can see this here real quick. Okay, and so here you can see these tweets. So right here you'll see that at, first of all, 10:10 p.m., the price action is killing many today. Stay light on your feet. What does that mean? We're getting a whippy market back and forth. Number one, right? Then the second tweet I put out a little bit later after talking to a couple people, positive on the day, right? Meat grinder environment. Those needing security to take a trade are getting killed again. And then someone asked, fired back a tweet at me, and I responded to that. It goes, and they asked, what does that mean? I said, what that means is for those who need the market to go up before they can get long and down before they can get short, get shredded. Okay? And then, hold on one second here. Oh, I can't get this to work here. There we go. Okay. And what that means